Yeah, as I just said, today is just a very quick presentation on SMSF, the why, the what, and the how, and then with some questions and answers towards the end, which won't be recorded. Okay, so let's get started. This is a series. Today is the basic free SMSF introduction. We do hold other sessions, one on SMSF, the paperwork and how to manage one, and also just a free open mic question and answer session that anyone can ask any question about any financial matter, and I'll answer it if I can. So about myself, probably most of you do know me, but Catherine, I'm also known as Cass. I went to university for way too long, approximately 16 years. I never worked out what I wanted to do, so I did accounting and then tax and then financial planning and then mortgage broking and then real estate. Now I've basically put it all together under one business model where basically I can advise across a lot of financial fields based on my education, but also 30 odd years of experience in all financial fields. I was also a fraud investigator for 11 years with tax department, so I do know a fair bit about how the tax department operate as well. It's not financial advice, it's just general factual information for you to decide for yourself. If you're unsure, seek financial advice. As I said, you can talk to me about all those manners of topics. The only thing I don't do anymore is financial planning. Financial planners advise purely or mainly on the financial market, as in the share market and share investments, market investments. I don't do that anymore. I quit that role during COVID because I'd no longer wanted to put people into that sort of investment. All right, this is one of my favourite sayings. It came from a movie when there was an asteroid heading towards Earth. How would the governments of the world prepare the people for an extinction level asteroid heading towards Earth? And the answer was, well, they wouldn't. That's what I exactly feel is going on right now. How would the governments of the world prepare the people for the biggest economic collapse in the history of the world? Yep, you guessed it, they wouldn't. That's what I believe we're on the verge of right now. Probably already know they raised the interest rates again today. Australia's in for more and more pain. Another very large building company went bust today. Another one went bust yesterday, falling like dominoes. So I think we're on the edge of the biggest economic collapse in the history of the world. I'm not the only one that's saying that. There's other people like Robert Kiyosaki and James Rickards who are saying the same, and a lot of other people. So what does that mean for and why am I saying this when we're talking about self-managed super fund? The reason I'm saying it is that a lot of people aren't aware that your superannuation, if it's in the funds in the market, all of them, Australian Super, Rest, Host, you name it, it's all in the share market. Unless you're specifically chosen otherwise, they put it in the share market. And if we are heading for the biggest economic collapse in the world, share market is usually the first thing to go. The share market crashed, as most of you would probably know, by 50% in the GFC. That wasn't the biggest. The biggest was actually 80% back in the 30s, and it took 30 years to recover. And we're predicting a bigger collapse than that. So that's why we're talking about the share market in context of SMSF, because what a lot of people are doing at the moment is setting up SMSF to get their money out of the share market. Okay, so what is why use a self-managed super fund? I've been involved in self-managed super funds for over 20 years, and I have always used the model that they're simple. If you Google them, a lot of people, commentators will say they're very, very complex, and that's why you shouldn't do one, because they're really complex. But that is our job as the accountants and tax agents. Our job is to deal with all the complications and make it simple for you. The main reason people are doing them is to take total control of their super. SMSFs have been around for 20 years, but they really became popular after the GFC, because after people woke up and found that 50% of their super was gone, then people started realizing that, I didn't even realize my super was in the share market. So that's when people started to rethink and start to think about SMSF is to have total control. And probably over the last 10 years, the majority of super funds that SMSFs that we set up were mainly to buy property. That's changed a little bit now, which we'll talk about shortly. You can also pay less fees to managers if your balance is over 200,000, and that's a combined balance. An SMSF can have 6 members. The majority of our SMSFs just have husband and wife, partners, or brother and sister, or I just spoke to a mother and son. But once you start to put a few people together, it's not hard to get over that balance. And once you're over that balance, an SMSF is actually can be more economical than the other super funds on the market. That is because most super funds charge between 1 to 1.5%, and they don't tell you about it. Most of them don't. Some do now, but the majority of them just have their fee on their statement. That's just a small fee, a few $100s, and you think, oh, that's not too bad. They're charging a whole lot of hidden fees in the portfolio that they've invested you in, and they're not even telling you about that. If you've got a financial planner, they will charge another 1 to 1.5% on top. So super funds can be very, very expensive, and the SMSF can be a lot cheaper. The other reason people are just doing SMSF is that you decide where to invest, and we'll talk about investments shortly. You can also move your money very quickly. The reason I say that is if any of you proceed to set up an SMSF, it is a 4 to 6, even an 8 to 10 week process, depending on the obstacles we encounter. So it takes quite a long time. Once the money is in the SMSF, even if you just left it cash sitting in the bank account, that's okay. But if you decide to move that quickly, literally, you can log on to your internet banking and move the money, say, into gold or something like that, really, really quickly. So rather than, delay the matter and have that 10-week process, get it started, get it over to your own SMSF, and then decide what to do after that. So what can an SMSF invest in? Basically, every investment that is deemed to be a good investment is doable. So the most popular ones being property, the share market, gold, silver, bonds, term deposits, crypto. Can do some other things like antiques and artworks, but just be a bit careful and talk to us or an accountant before doing that. There's rules and things you need to meet. So there's one main rule for every SMSF investment, and that is it needs to be for the sole purpose of your retirement. So I have had clients ask me a Harley Davidson or a yacht. No. You may be going to use it in your retirement, but it's not for the sole purpose because it's for your enjoyment, really. So the main one that people ask me about the sole purpose test is you can't live in or on a property bought by the SMSF. But there are a few options such as renting to third party, like a friend, renting to a business run by the members, like retreats, farms, therapies, all sorts of businesses. So that's something you can talk to me separately in a one-on-one session if you're planning to do something like that. How to set one up? Basically, the first thing you need to do is decide if you want a company trustee. If you do, you'll need a director's ID number. And before you shudder, there's been a lot of controversy about the director's ID number. It's settled down a bit now, but I was quite open at the time talking about the director's ID number. I'm not as opposed to it as other people. But if you really, really don't want it, you can have personal trustees instead of a company trustee. The requirement there is there must be 2 members at all times. Because of that, the personal trustee can be more costly and more difficult to run because every time a member changes or comes and goes, the whole fund needs to be reworked, which can cost thousands at any time. So despite the director's ID, we still do recommend having a company. So once you've decided, either if you're going with the company, you will need to obtain your director's ID number. We can't do that. It's the one thing that we can't do for you. And I do say this as sort of a bit of a test. If you can't get your director's ID number, you're probably not competent enough to run as SMSF. You are going to need some basic computer skills to run an SMSF. So to get your director's ID number, you simply Google director's identification number. The government website is quite clear on how to step through the process of getting one. The easiest way to do it, I talk about here. It's easiest on MyGov if you've got MyGov. But if you haven't and you don't want it, fair enough, you can call them. Quite easy over the phone, a bit time consuming, may take an hour or so, but you call them. You can do it on a paper form, but that's a very long process. The reason I'm not opposed to the director's ID is particularly if you do it on the phone call, all you're giving them is your 100 points of ID, like your driver's license and your passport, which they already know that. So to me, it's no more of an invasion of privacy than we've already got. Okay, once you've got your director's ID, or if you're going personal trustees, you simply click onto the order form on the freedomffs.com.au website. Once you've filled in that order form, we then just do it all for you. We establish the SMSF and appoint the trustees. We obtain a tax file number and an ABN. We set up the bank account with Macquarie Bank. The most important thing is you are the signatory and the controller of that account. Nobody else gets to touch your money. We then roll over the funds from your existing super into that bank account. It's as easy as that. There's a lot of paperwork and things to be done and emails to be answered, but pretty much we step you through every single step of the process. The first question we get when people get onto the order form is, you're asked for a name for your SMSF. You can name it anything you want. Some people most people just use their surname. Mine is Smith Family Super Fun, as boring as you can get. But other people, some of the names I see come across the systems are really quite funny. You can make up anything you want, get inventive as you want with it. Takes 6 to 8 weeks currently. It can drift out into 10 to 12 weeks if we encounter hurdles. The biggest hurdle is the tax department. If they take it offline, they basically just stop the order. They used to turn that over in 28 days. Now they don't even promise the 28 days. We had one that was stalled by the ATO for about 3 months. But hopefully most of that won't happen to most of you. It only happens in maybe about 10% of the cases. The fee to set it up is $2,200. We used to say you could pay all of that, excuse me, once the rollover is in. Unfortunately, we had to change that just because, in every industry, there's always some bad customers. We had clients that would go all the way through right to the end of the process and then refuse to pay us. So we now ask for a deposit of $660. Basically, I call that, I guess, your blood on the table. You got to put something out to prove that you are going to go ahead with this process. You can reimburse yourself at the end of the process. So in the end, it can all come out of your super, but we just ask for that bit up front. The annual fee is 1%, but it's capped at $3,300. So once your super fund is over $300,000, the fees don't go any higher than $3,300. That's our fee, the accounting fee. There's also a minimum fee of $1,650. So basically, I did a table the other day and sent it out in the newsletter yesterday, where it clearly showed that if you've got less than 200,000, the fee is going to be a little bit more than what you're paying in your other super funds. Once you're at 200, the fee actually becomes cheaper and cheaper and cheaper in comparison to the other funds. The fees are all payable from the SMSF, not out of your own pocket. And as I said earlier, an SMSF can have 6 members, usually partners, adult kids, maybe siblings, groups of friends. I don't encourage people to go out there and get together a group of 6 randoms. In almost every case that people have tried to do that, it's ended up falling over. Just because when people are putting their money together, trust issues come up, all that sort of thing. So keep it to very, very, very close family or friends. Is there a minimum balance? No, there's not. Some accountants will tell you there is, but there is no minimum balance required. It is your choice. We used to suggest over 200,000 because of that fee issue. However, that was in the olden days 3 years ago before the world changed. Now it's different. Some people, even with very small balances, are still deciding to do this because they want to get their money out of the system, avoid the share market crash, take control, have freedom, take your money out of the big corporates. The government is now pushing the corporate superannuation funds to use your money to help build the smart cities, like all of these things that we don't really want our money used for. So some people are doing SMSF just to get their money out of that, not have it used for the smart city. So it's all entirely up to you. I say here you do need over 50 to 80. If you've got less than that, try and join with others. Having said that, we did one for 18,000 the other day and it got through the system fine. Personally, I think that's way too low for an SMSF. But the lady wanted to do crypto. She's made a fortune in crypto elsewhere. She wants to use it for crypto. It's your choice. We talk about a tax office audit, and as I said, about if the tax office stopped the order. It's not a full personal audit. They're not going to look at your personal taxes or your business taxes. They just want to have an interview with you to see why you are doing an SMSF. We are getting less and less of these now because I think they might have flagged our firm as okay, because everyone we've set up, every tax office audit we've had, our clients have passed with flying colours. In 2 cases, they got knocked back and I objected and got it anyway. So I think the tax office are realising to pick on our clients, they're just wasting everybody's time. But if you do get pulled up, they'll just want to do a phone call with you. We will guide you as to what to expect, and we'll help you get through it. As I said, we've won every argument so far. So in the worst case scenario, they say no, then we'll go into argument for you. The only time they've got a legitimate reason for saying no is if you have a bad history of tax compliance. So if you're overdue on your tax lodgements or we've got a big tax debt, they will use that to stop you. So you need to talk to us about and clear that up before you go ahead. Because they've got no right to stop you as long as, your tax compliance is up to date. A lot of super funds have insurances. We encourage you to keep your insurances in your current fund. So to do that, we leave a minimum balance behind, usually about $6,000 to $7,000. And then we can introduce you to a financial planner later to see whether you can switch your insurance to the SMSF. So that's how we deal with that. So why use us? Firstly, we're like-minded. We're also running as a not-for-profit. A bit of my background is that I was planning to retire this year. I didn't want to work anymore. I'd had enough. But I felt a calling to come back and help people with this because I seem to have a lot of knowledge on this issue and it's really helping people out. So, but I decided I didn't want to be out there trying to make a huge profit out of people in the freedom movement. I wanted to run it as a non-profit. So we don't donate back to the freedom movement or to any good cause that we feel that can help move our cause further, because we sure need some help. We'll also fight for you when it comes to the tax department. This is not a job to us, this is a mission. And I quite like taking on the tax office. They forget I used to work there as a senior manager, and I've actually got one of my degrees was a master's in tax law. So I'm not afraid to pull out my tax law card and have a go at them. We're also humans, not online. You can get an SMSF cheaper with the online firms, but all they do for you is the trust deed itself, whereas we do the ABN, the TFN, the bank account, the rollovers, insurances, everything. So I've had a lot of people try the online companies and then end up coming to us and saying, oh, please take this over. I can't do this anymore. Very quickly on property, because a lot of people are interested in property still. You can buy a property outright. So let's say, for example, 2 of you or 4 of you or 6 of you have enough money to just buy something outright. That's great. That's the easiest way. You can also borrow to buy a property. So up to 6 of you, put all your money together and borrow some off the bank. I'm a bit hesitant about borrowing at the moment because of the interest rates. They went up again today, but you can still do it. The final one I'll cover off is quite complicated, so I'll show you a picture. And this is where multiple SMSFs with up to 6 members each come together to buy a property in a trust. So this is the picture. So we have done this, and this is something that I'm working on with business partners, where we're looking at getting farmland in a trust, and SMSFs and just individuals as well can all put money in and buy into that farm. Obvious reasons we're doing it: to get out of the city and onto farmland. You can't live on that property if you've done it in an SMSF. But you've still got a bug out option there, where if everything really headed down, you'd have somewhere to go. You can't live on it while it's in an SMSF, but you can transfer it out to yourself at a later stage. So yeah, this is an option. If anyone's interested, you just get yourself onto my email list if you're not already on there. We'll send out options like this when we come up with them. We've just finished one in Queensland. We're looking at one in South Yarra in Victoria. You probably all know my contact details. It is best to email me. I don't answer the phone. Other staff will if you've got basic questions, but if you want to talk to me, email me. I'm going to switch off the recording now and take questions, but thank you all for coming. Just one moment, I'll stop the recording. All right.